Hello everyone, I'm going to explain to you guys why the stock market can continue to rally over the course of the next few weeks. I'm thinking that we can run up into 4631 for ES, and then I'll cover the Dow Jones and we'll review NASDAQ and Bitcoin later in the video. So if we start off on the higher time frame, I'm going over my top-down ICT analysis. This big retrace, this big crash to the downside, this was approximately a 30% crash down. All it did was retrace back into this down close candle. This down close candle is a bullish order block. So see how we have this down close candle and then it's followed by this little gap in price. This makes this a high probability order block. So I'm going to mark out the open of this down close candle, the upper wick since there is a large upper wick, and then the 50% level, which is the mean threshold. These are all sensitive points of the bullish order block. So we retrace down into there. If we drop down onto a weekly time frame, we get a run on sell stops. So we have this old low right here. We get a big run up and then it crashes right back down, takes out this old low. So retail traders that are trying to long this, thinking that this move back down is just a falling wedge or a bull flag, a lot of stops are going to be placed beneath here. The algorithm targets those lows. Smart money buys from the sellers at a lower price. They get filled on their orders, so there's no need for price to continue down lower. Then we get a shift in market structure right here to the upside. And where are they going to distribute the price now to offload their long positions? They're going to need to take price above old highs, because above old highs is buy side liquidity. So a lot of learning ICT is learning the terminology of it. And obviously you need to learn the skill set too, but it's much easier once you just understand the basics of the lingo. So basically above old highs is buy side liquidity or buy stops, because when retail is shorting, right, stops typically get placed above old highs. Those stop losses are categorized as buy stops. So the algorithm will start to spool to the upside, take price above old highs, so it gives smart money the chance to offload their long positions to buyers at a higher price. So they're taking it above old highs because the market is going to be flooded with buy orders when price takes out old highs, because again, that's where a lot of retail trader stops are, and then smart money has the chance to sell to buyers at a higher price. So I'm thinking that they're going to take it above 46.31 because smart money is still long, and I think that they're going to want to distribute price above this old high because there's definitely going to be a lot of liquidity above 46.31. Institutional order flow is still bullish on the weekly. So bullish PD arrays are being respected. You can see that price is just returning to down close candles to go higher. If we mark out the order block the same way we did on the 2-month time frame right here, you can see that we did have accumulation within this down close candle. It respects these sensitive points of the order block before continuing higher. So I'm thinking that institutional order flow can continue to be bullish until we reach this objective up here. Now, how far can it go above this high? Well, it is potentially possible to see all-time highs after that, which is at 4808.25. I'm not saying that is needed. I just think that it's going to target this 46.31 level, because smart money's still long, and again, I think they're going to want to distribute it higher to sell to these buyers above this high. So that's going to be it for the ES analysis. Now let's jump into, actually I do want to show you guys ESU. So the chart that we're looking at right now is ES1. That's at around 46.31. If we look at the ESU chart, this is the contract, this is the September contract. That same high is around 4714.75. So if it does end up running for this high, which I think is definitely possible, it is likely that it would run it on the ES chart before the ESU 2023 September contract, E-mini S&P 500 chart. So this is a little bit higher up, but at some point it's likely to run it on both. So that's going to be it for ES. Now let's jump into my analysis on the Dow. And very similar right here on the 2-month, we've returned back into this high probability order block because it has that gap right there. It makes it high probability. I'm going to mark out the open and the upper wick. These are sensitive points of the order block. Same thing on the weekly time frame, it ran this old low, taking out the sell side liquidity. We see a shift in market structure to the upside. Smart money is long down here. They're distributing price to buy side liquidity to then potentially offload their longs above here. I still think that they're going to want to take it higher because look how it's clustered all of these highs very close together. Typically when that happens, it's the algorithm engineering buy-side liquidity. So a lot of retail traders are thinking what right now? They're thinking that we have a lot of strong resistance here and we can pull back down lower. I'm thinking that the algorithm is just engineering liquidity, so a lot of stops get placed above these highs. So we have this high relatively close to that high, and then this high relatively close to this one, and then also that one's relatively close to this one. So just a lot of highs clustered close together. I think the Dow can run for 35,413 and above this high as well. This high is going to be at 35,228. So I'm not saying it has to run for it right this second and just spring out of here. That is possible. It could still consolidate some more in here. I just think from a macro perspective, smart money is going to take it above this engineered liquidity resting above. So that's my analysis on ES and YM. I'm thinking that we can continue higher on both of those because smart money is still long, right? We get this nice market structure shift upwards with fair value gaps, showing this is a valid market structure shift. That's going to be it. Now let's take a look at NQ, and I'll show you guys this setup that I posted in the Discord. So this was May 30th. I said since institutional order flow is bullish and we're seeing tons of strength to the upside on NQ, here's something to aim for: the equal highs with a monthly fair value gap above. So we're eyeing up these equal highs right here. The current price was at 14,524. I was looking for price to kind of spring into that 15,260 level, and you could see it did make a nice run to the upside. This was about a 700-point move upwards, and it did pretty much rebalance or reprice to the upper end of that fair value gap. It just missed it, but getting very close. Nonetheless, it did take out those equal highs right there. Now we're just consolidating. If you guys would like to see more setups, I do cover more analysis in my Discord. I will leave the link down below. So it's a little bit hard to tell what's going to happen on NQ since it already delivered to those targets. But when we take a look back at YM and ES, it's still playing catch up. So I'm thinking that it's just a little late to the party, and it's still going to catch up and run above those buy stops above here. Now, why did NQ reach those highs before ES or YM did? Well, if we drop down into a daily chart, actually, we're going to take a look at a 3-day time frame in here. I believe somewhere in here, I don't remember, I think it might have even been on the 12-hour or daily, we did have SMT Divergence, and it was bullish SMT Divergence, and that is when ES would make a lower low, or it could be the other way around, and then NQ can make a higher low. So typically when this happens, it shows that we are seeing real accumulation between the NASDAQ and ES, and they're failing to take NQ below this lower low right here. So they're not taking NQ below this low because it's under accumulation by smart money. Typically when this happens, the one that fails to make the lower low, so see how NQ does not make that lower low, but ES over here, right? This is ES right here. ES does make that lower low. When this happens, NQ will be the stronger one to the upside. This is called SMT Divergence, and that is the reason why NQ has delivered higher while ES and YM are lagging behind, because this was under accumulation first, and it was the one that failed to make the lower low. Now let's jump into Bitcoin. I just kind of want to re-go over what we previously talked about on this channel. This was 6 days ago. I went over targets, going over why we can spool towards 26.8K and then potentially 28.4K. We had 3 targets to the upside. I explained my analysis, why smart money was long, and they're going to want to distribute price higher to buy-side liquidity up here. And you could see that it ended up delivering to all of those targets. So just to kind of do a little review on here, how I knew that price would deliver higher. If we take a look at the 1 month time frame, we did have this bullish order block. This was a high probability order block because we had the down close candle followed by a gap in price, right? The algorithm reprices back to that order block. If we take a look at the daily time frame, when you look at this chart, what you see is that it's going below old lows, but what is it failing to do? It's failing to go above old highs. So it's engineering buy-side liquidity. So it's leaving old highs in play, and it's taking out old lows. So we're seeing all the sell stops being taken out of the market while it's engineering the buy-side liquidity. So once we're down here, it's taken out so many old lows. We're in that monthly fair value gap, which is a higher time frame point of interest for us. And then we get this shift in market structure to the upside right here with that fair value gap. So these were signs that smart money did want to push the price higher. And where are they going to take price? If they're long down here, they're going to take it above these old highs because that's where retail has their buy stops at. So I think a great way to find bias is just kind of looking for higher time frame points of interest, aligning yourself with order flow, and then figuring out a narrative as to why it should play out. So there needs to be a why in your analysis. That's going to be it for this video. If you guys enjoyed, smash that like button, and I'll see you guys next time.